I see it from my clients all the time. They have accumulated assets, but don't want to consider an umbrella policy. Think of it from this perspective. A serious accident can last only a few seconds, but the financial consequences can last for years. For example, so maybe there is a major car accident involving several people. Maybe a guest is badly injured at a home, or maybe a claim is filed after an incident involving a teenage driver. Yes, the home or auto policy may respond first, but what happens if the liability claim is larger than the limits currently on your auto and home policies? That is when personal savings, future income, and other assets can become part of the conversation. Stay with me until the end, because I'm going to explain the warning signs and may tell you when it is time to consider adding an umbrella policy. I'll also cover one mistake that can leave a gap in coverage, even when an umbrella policy is already in place. So let's get started. A personal umbrella policy provides an additional layer of liability protection above certain underlying policies, such as a home or auto policy. Here is a simple way to think about it. The underlying policy is the first layer of protection. If a covered liability claim reaches that policy's limit, the umbrella policy may provide additional coverage, subject to its terms, conditions, and exclusions, of course. The fact is, an umbrella policy does not replace home or auto insurance. It sits above those policies, and depending on the carrier and the policy, it may also cover certain personal liability situations that are not covered in exactly the same way by an underlying policy. That is why I look beyond the coverage amount. I also review what is underneath the umbrella and what the policy does not cover. Now that I have explained how the protection works, the next question is when that extra layer becomes important. The first checkpoint is what? The main asset at risk after a large liability claim. Most people immediately think about savings investments or the equity in a home. Those are important, but they are not the entire picture. Future income may matter too. Someone can have a modest amount in the bank today, but still have many high earning years ahead. A serious liability judgment could affect the financial plan you've worked years to build. The question is not simply, am I wealthy enough to need an umbrella policy? The better question is, will the liability limits I have today be enough to protect the life I'm building? Keep in mind, state laws affect which assets and income may be protected. So this is not legal advice, but a reason to review liability protection before a claim occurs. Assets are one part of the check, but everyday activities can increase the exposure even faster. That leads to our second checkpoint, which is the activity around the household. What if you have a swimming pool, trampoline, boat, recreational vehicle, rental property, or pets? These things may increase the possibility of a serious injury or liability claim. What if you're hosting gatherings, which can also create additional exposure? For example, one fall, one accident near a pool, or one incident involving alcohol may become much more serious than expected. Owning these things does not automatically mean something will go wrong. It simply means there may be more opportunities for an injury or property damage claim to occur. The fact is, your liability protection needs to reflect the real household, not the household that existed several years ago when the policies were first purchased. Property can change the risk, but one of the biggest umbrella triggers may be sitting in your driveway. The third checkpoint is the number of inexperienced drivers in the household. Adding a teenage driver is a major reason to review liability limits. New drivers are still developing judgment and experience. Even a responsible teenager can make a mistake that causes a serious accident. Keep in mind, the same review may be needed after adding another vehicle, purchasing a motorcycle, driving more miles for work, or regularly transporting passengers. There is another detail I check carefully, and that is this. Every driver in every eligible vehicle must be properly listed and meet the umbrella carrier's requirements. The required underlying auto limits must also remain in place, but don't think an umbrella policy should be treated as a reason to reduce the limits on the auto policy underneath it. Let me put these checkpoints into a realistic situation. Let's look at this family with a home, 2 vehicles, retirement savings, and a teenage driver. The teenager caused an accident involving several people, medical expenses, lost wages, vehicle damage, and legal costs. Begin adding up. The auto liability coverage responds first up to the applicable policy limit. But if the covered claim exceeds that limit, the family may be responsible for the remaining amount. That means an umbrella policy could provide another layer of protection after the required underlying limit is reached, subject to the policy terms. Without that additional protection, the family may have to defend the financial future. It spent years building. This is not about blaming a teenager. Accidents can happen to experienced drivers too. The lesson is that a household can change faster than the insurance plan supporting. What I'm saying is this. A new driver, a larger home, a rental property, or growing income can turn yesterday's liability limit into today's coverage gap. That leads to the question I hear most often. How much umbrella protection should I consider? There is no single amount that fits every household. I would start by looking at assets, income, future earning, potential drivers, vehicles, property, and activities that could create additional liability exposure. Then, I would also consider how much protection the home and auto policies already provide. Umbrella policies are commonly offered in million-dollar increments. In the end, the right amount depends on the individual situation and the available carrier options. The goal is not to select an arbitrary number. The goal is to create enough protection so one cover liability claim is less likely to undo years of financial progress. But choosing the coverage amount is only part of the work. The policy underneath it must stay properly aligned. Now let's go back. Here's the mistake I mentioned at the beginning. An umbrella carrier normally requires specific liability limits on the home, auto, and other underlying policies. If those limits are reduced or if an eligible vehicle driver, property, or exposure is not properly insured, a gap may develop. The umbrella policy may not simply step down and pay the amount the underlying policy was supposed to cover. That could leave the policyholder responsible for the difference. This can happen when policies are moved to different carriers, a new vehicle is added, or rental property is purchased, or someone lowers the auto liability limits to reduce costs without considering the carrier's umbrella requirements. That's why I recommend reviewing the entire liability structure together. The home policy, auto policy, recreational vehicle coverage, rental property coverage, and umbrella policy should support one another. So when is it the right time to complete an umbrella check? Great question. I recommend completing an umbrella check whenever there is a meaningful life change. That includes adding a teenage driver, buying a home, adding recreational equipment, or making major changes to the home or auto policies. It is also worth reviewing if the current umbrella policy has not been examined. I would confirm coverage for the current household members, vehicles, and owned properties. Then I'd make sure I understood the policy underlying limits and major exclusions. In the end, be aware that policy language and available options will vary by carrier and state. That's why the review should focus on the actual policy, not a general assumption about what an umbrella policy covers. Once those details are aligned, the purpose of the policy becomes very simple. An umbrella policy is not only for the person who considers themselves wealthy, it's for anyone with a growing income, a home, teenage drivers, those with major assets to protect, and for any activities that create additional liability exposure. The right time to review the coverage is before a serious claim that could test the limits you already have in place. Review the limits, review the exposures, make sure every layer works together. That is what an umbrella check is designed to accomplish. Now, if this content was helpful, please leave a thumbs up in the comments. It really helps with engagement and helps push this video out to others. Also, word of mouth is good too, so please share this with someone who may benefit from this topic. Then check out my video library, where I have content on home, auto, business, specialty insurance, and retirement. And while you're here, subscribe to my channel and help me reach 1,000 subscribers. But don't stop here. Check out my next video for more insurance and financial tips. And as I like to say, call Jay today.